In Stocking Up today, we have Todd Bubba Horwitz on the trading floor with me. Good to have you here as always.
Good morning, great to be here.
So you are watching Wells Fargo. What do you expect in this stock? The options market is predicting the stock could maybe have about a 2% move here this week.
Well, you know, I'm, as you know or haven't figured out, I'm a value guy. I think that Wells Fargo is still a solid company. We know they're going to get fined. Everything is now out in the open. We know there's problems. They're not going to jail. And I think that we're going to see the stock is going to build a nice base. And let's face it, the financials in general have been beaten down overall anyways as they try to wait for the interest rates to rise so they can actually lend some money. So I think down here, Wells Fargo is a pretty good value play. I don't see it going a lot lower than here. I think that if you want to buy one and hold, this would be one of the great financials to get because you're getting a discount because they've got some other issues on the outside to look at.
And it has tumbled since a scandal broke about this alleged phony account issue.
And it'll still continue. I mean, again, we may go up, we may go down this, but I think this is an area, you know, this has been playing out for 8 days now. We've now seen basically everything coming out. We saw a stump on the Hill yesterday getting grilled. At the end of the day, the regulators aren't going after them. They're going to fine them, which they know, but they've made so much money, more than the fine. Eventually, they turn around just like Bank of America did, just like JP Morgan, and like all the rest. Then bad news will be done, and the stock should resume back to going upside.
Something else you're watching is cow.
Cow.
C-O-W.
Moo cow.
Moo cow. Tell me about this cow.
Cow is a Jack and the Beanstalk. I can trade some magic beans. Cow is actually an ETF. It's fairly thinly traded. But I am a big fan of the livestock and agricultural markets right now. I think they've been well overdone. I think that the Fed has created the more expensive dollar, or the appearance of a more expensive dollar, which has pushed these asset classes down to levels that I don't think they're going to sustain. I think they're going to turn around and start to work their way higher. Cow represents the livestock, hogs, and cattle. I think at $19 to $20, I think it's a great value play. Again, it's lightly traded. It's a thin ETF. It's new, but I think that overall, I think it works its way back up. I think the markets turn around. You know, I like the agricultural space anyways, and especially at these levels, I think it's a solid trade that you can hold on for a while.
Well, interesting to note, too, we've had a lot of fluctuations happening, of course, in the grains market, and we've seen prices rise this summer. Where do you think that we're going from here?
Well, grains are now basically close to 5 and 8 year lows in corn and wheat. Soybeans are holding up here in between a range of $9.40 to $10. I think they find a bottom and work higher. I think they've already priced in the higher dollar. You know, everybody's worried if the Fed raises rates, the dollar goes higher, puts pressure on commodities, gold and soft commodities, the whole deal. I think we've already priced all that in. I think we start to look for spots to go higher. This is almost an instant replay of last year's grain markets where we were struggling along and then all of a sudden they found a rally at the end of the year. I think we find a rally. I think it helps the JJG we talked about, then the cow and all the grain space. I'm a buyer of grains. Again, I'm looking for value, and I think this is where the value's at.
Thanks for coming on the show.
My pleasure.